Hello friends, welcome to my YouTube channel Simply Stocks, and today it's the Republic Day, so very happy Republic Day to all of you. And these are the 5 companies, mid-cap companies for the next 2 years which would perform extremely well and have come to reasonable levels that I bring to you this Republic. Thanks a lot for watching. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about these companies, as more request, kindly support me on Patreon. And once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100, then you get 1 year access by paying for 10 months. So that's a discount of 16%. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, kindly take monthly membership on YouTube. You can take that with any mode of payment. Now, about the criteria of these companies, these are established brands, strong management, diversified yet market leaders in their own space, virtually no debt in these companies, strong institutional holding, solid return ratios and numbers that come in these companies. Number one in this list is Tata Power. It is a leading power company and has done exceedingly well to reduce debt over the last 4 or 5 years, and it was trading around 60 to 80 rupees for a long period of time, and now has broken out and is trading more than 200 rupees. There have been a number of reasons for that. They have been striding forward in the EV space with charging stations and many other things that they are doing in the EV space. A lot of investments have come into it and looking to set up a number of EV charging stations across India, trying to get approvals for the same. Already has many power projects in hand currently, and stock is in a medium term uptrend, and sales are gaining momentum and profitability would come in big time once these things come on board, probably 2 3 years down the line. So markets will discount that early. So over the next 2 years, I see the stock price traction to take place from the current range. So one can what one can do is probably buy between 190 to 20 region and take advantage of this. I think it would be at a reasonable levels if you get it around 200 to 10. Second in this list is Coforge, a top mid-cap IT firm and has produced very top-class numbers, and it is one of the larger mid-caps that I'm talking about, and something that has fallen from the top, the highs being around 63, 6400. It has gone down 20, 22% already. Yes, IT could be under pressure with Nasdaq going down and with the seasonality effect probably in the next couple of months, but that would be opportunity to buy into such companies. Margins have remained strong in difficult times, and margins have gained momentum in the last couple of quarters. And I believe that over the next 8 9 years, this sector is going to be the best performing sector for the decade. So it is in a long term bull phase, and there's strong order pipeline for Coforge as well. So valuations are still stretched, so I believe that what you can do is probably buy some here and wait for levels of 4700, 4500 to buy even more. I think correction may continue in the IT space for a while, so these are opportunities to buy from a 2 year point of view. The third in the list is Laurus Labs, and erstwhile favorites of many investors, traders from 360 levels, and the way it has moved up from 350, 360. It has been correcting, and most of the pharma stocks, API stocks have gone out of favor over the last 6 months or so. The stock has been correcting from July, August, and we have seen a correction from 730, 740 all the way to 470, 480. But the fundamentals of the company has not changed. Yes, one of the numbers were a little bit sluggish, the last quarter numbers, and maybe this quarter would remain the same, and that's why the stock has not performed and has been in a range between 470 to 550. But return ratios are pretty good, margins are good, and it has leading clients in the API space. And remember that the valuation support the stock, so there is a lot of margin of safety to buy around 470, 460, 470 if you have cash at the moment. It is coming at reasonable valuations, and top investors and HNI are backing the stock and are invested in the stock. Even LIC has bought a significant stake in the stock just recently. 550 is a strong resistance. What you can do is buy here and on dips to 450, 460. These are very attractive levels. I think that it might face resistance around 550, but there is very little downside in the stock from current levels. Next in the list is Coromandel International, one of the very strong agricultural plays, and I believe the move could begin as early as from March, April onwards. And it has been consolidating in a very sweet range, provides crop protection products along with fertilizers and phosphate solutions. So a lot of products it produces. Again, large investors, HNIs, FII, DIIs are invested in the stock, and they mainly produce pesticides and specialty nutrients for the agri space. A very, very good management and a very top pedigree stock, a market cap of around 22,000 crores, which is reasonable. So it has been in consolidation and can be slowly accumulated here, and you could see good 30-40% upside over the next 2 years, even more if things go by correctly, but minimum 30 to 40% upside could be possible here. Again, a very good level to buy into between 700 and 750, and there is a lot of margin of safety if you buy into the stock in this region. And the final stock in this list, and this come about because of the fall that most of the technology stocks, most of the new age stock has seen. Although this has been a listing of last 6 7 years, but of the last 5 years, but this stock is a kind of a new age thing because of producing such electronic products and being in the PLI scheme. So Dixon Technology is a leading electronic contract manufacturing firm. They have got PLI approvals for scheme approvals across the board, and they manufacture consumer durable products as well as electronics. So they have the best clientele in the list, and although margins have shrunk last quarter, and this quarter we may see the best of the numbers for the next 2 3 quarters, and that's why probably the stock is under pressure. But this is the time to buy big into such stocks from a 2 year point of view. Boast of best clients in the business. The market cap of the company is around 26 27,000 crores, which has come down appreciably. So the stock was trading around 6200. The stock has declined to around 4600, 45, 4600. It has gone down by more than 20% already, around 25%. I think more about you could say 3 to 400 rupees more downside at most, that you can see. 4200, 4100 is a strong support, and one can accumulate in this region over the next 2 3 months for a 2 year time frame for a decent upside. I see new highs and probably even 7000 on the stock in the next couple of years if things really go right for the businesses. So this is my video on the five best of the picks in my opinion over the next 2 years that one can accumulate. Please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it, and kindly support me on Patreon, and disclaimers do apply. Thanks a lot for watching.